Hello, everyone. Welcome to IT Tech Talk. I'm your host, Joel Ward, and tuning in today with me is founder and CEO Jim Chu of Untapped Global. Jim, how are you doing today?
Very good, thank you. Glad to be on the show.
That's good. Jim, you know how the show works. The show is where I interview entrepreneurs, influencers, CEOs. Jim, why don't you give a little brief background about what you do and what got you into it? I see you are a CEO, but it looks like you tapped into the entrepreneurial market. Tell me a little bit about that.
Yeah, well, I started off really just as your typical big company worker. So I graduated from Stanford undergrad and grad in the early 90s, and I worked for companies like Cisco Systems in the 90s, but also did very much your typical tech startup thing, running some of my own as well as running companies that other people have started. But I really, during that entire time, I really had this hankering for creating companies that would have more than just a money-making impact, but companies that would actually solve real-world problems. And I think it's a long journey to go where I started, where I am now. But I thought that way initially was through social businesses and even through philanthropy. And so early on in my career, after I left Cisco, for example, I did a lot of investing, but I also did a lot of donations and charity work. And I very quickly realized that the best way to drive change in the world is to invest in entrepreneurs. And that's really what I've been doing for the last 20 years, both in the US and in the last 5 to 10 years or so, really focused on emerging markets and investing in entrepreneurs in Africa and other places. And so these days, I do a lot of investing still, but I launched a company now that's focused primarily on that. How do you create better ways of funding and financing small businesses and entrepreneurs who are solving real problems in places like Kenya, South Africa, and markets that are growing fast and lack the opportunity in financial markets for those economies to grow, right?
So, what's funny is I had a lunch meeting a few months ago, actually, with a friend of mine who he just works, his 9-to-5 job. But this is one of the major things that if he ever won the lottery, he said that he would do whatever he could to start up like some kind of startup to help fund entrepreneurs, kind of like what you're doing, help fund entrepreneurs and give them a chance and a shot at, like, they would have an investment, he would invest in them, and they would give back to him a portion of what they made if they took off. And he said that was his dream, is to help entrepreneurs. And I think it's really cool that I get to talk with someone today. I'm actually going to share this interview with him because I think this is really cool that there's someone out there helping entrepreneurs, giving them a chance. There's not a lot of people, and I don't know this, I'm not just going off what I know just from the local area. There's not a lot of people who put much time into entrepreneurial things. They're like, oh, you have an idea. Well, I've seen this idea 100 times, and there's like people like Shark Tank and stuff, but there's not people really giving small businesses the idea, the chance. And one of the things you were talking about, the emerging markets in different countries, there's an untapped potential there. There's so many different ideas popping up. And I think that's really cool. So talk a little bit about emerging markets in other countries. What made you start in that realm?
Well, can I just go back a little bit to?
Oh yeah, sure. Go ahead.
Just saying, it's interesting because I think, especially in the last decade or so, with all these startups, Google and whatnot, doing very, very well, that there's this craze about tech startups and everyone wanting to be a tech entrepreneur and so on. And that's good. And I've made quite a bit of money investing in tech startups, and I still invest in tech startups. But I think that oftentimes we forget that supporting small businesses and entrepreneurs isn't just about investing in startups.
Oh, definitely.
Tech startups, right? It's also about how do you actually help the small business that won't be a 200x multiple winner.
Yeah.
How do you help a entrepreneur who's trying to start or trying to build or even grow an existing successful business, but it's in a more traditional sector?
Yeah.
And it's often forgotten. And I think in the US, you can still access loans, you can still access SBI, small business grants and investments. But when you go to emerging markets in particular, those things don't exist.
Hmm.
And so you can be, and this is something I discovered over and over and over again, a very successful business in Africa, uh, and but you're not a tech startup that can do the winner takes all asset like
Yeah.
business models that venture invest in. But you're also not a $10 million power plant project. And if you're neither of those two things, it's almost impossible for you to get financing unless you're lucky enough to have a rich uncle in Canada.
Yeah.
And so because of that, there's all this untapped potential for small entrepreneurs to really grow. I mean, if we look at what's happening now with the Fed, increasing interest rates and the capital markets tightening up, and how big of an impact that has on the economy.
Hmm.
But imagine in many of these other economies, that credit was never even available. And so if you take the inverse, what would actually happen if credit was made available to those SMEs, to
Okay.
the majority of the economy? And so I think that's where the biggest upside potential is in the world.
Does this play into smart asset financing? Uh,
Yeah. So a little bit of background. So I think one of the biggest issues, and I think a lot of your listeners probably understand this, even in the U.S. markets. I think the biggest issue is really how you do underwriting
mhm.
for small business, how you do underwriting in general for financial institutions to give out loans. I don't know if most people know this, but the way that we do loans and mortgages and whatnot
Mhm.
is a 500-year-old financial model, right? It was
Okay.
developed in 15th century Italy by the Medici brothers, and they created these liens and these legal documents and collateral. All those ideas were really perfected in that time, and it hasn't really changed over the course of the last 500 years. So if I want to give you $100, what does that mean? That means I have to check to make sure you have $150 so that I can lend you $100, or at least you have a house that's worth $150,
Yeah.
right? And I have to go through all this due diligence and checking and paper writing and hiring lawyers to give you that $100. If it costs me $20 to do that, then I have to charge you a lot of interest to make sure that my $100 gets repaid. That doesn't work for small businesses. That works
No.
for a $10 million loan, but it doesn't really work for small business. So until you actually change that underwriting process, nothing will change. And so what we're trying to do with smart asset financing is to take this really rare window of opportunity in the global economy where everything is digitizing,
Hmm.
and start using data and embedded finance and IoT and digital payments, and use that as the basis for our underwriting. So what we do with smart asset financing is essentially we provide financing to asset financing, motorcycles, cars, refrigerators, blah, blah, blah.
Hmm.
But instead of saying, okay, Joel, how much money do you have? Okay, can you put your house, mortgage your house to take this loan? Or let me send a credit officer out there and double check everything you told me. Instead of doing that, we say, okay, you have this refrigerator. We're going to give you this refrigerator that makes money, but you're going to pay for it as you go.
Mm.
And we're going to take a percentage of the money you make with that refrigerator to repay the financing that I provide you. It's all automated, it's all digitized, so that not only do we have perfect information about your business activities and the health of your business, but we also capture the repayments much more easily.
So, so that's smart. So basically, it's like a pay as you go situation. Whereas, like you get like let's use the refrigerator for example. You give them a refrigerator that they use to store ice cold drinks. They sell at their little market, and every time a sale is made on that ice cold drink, you take a percentage of that to pay the smart asset financing that's going to pay that refrigerator back.
Exactly, until I am repaid. Exactly.
So, what has this been something that's been around, or is this something that you and your team have been working on to create?
Well, so I love to say that we, invented it. Of course, we didn't. What what's been invented is, or what we saw was all these small companies, or all these tech-enabled companies, really developing all these new business models that had some kind of smart asset at its core. And they were smart. They were
Mhm.
using IoT and digital payments to make their operations better. But they're also realizing that, a lot of our customers don't have the upfront cash to buy that motorcycle or buy that refrigerator or buy that whatever it is. And so, you know what we're going to do is we're going to actually give it to them as a service.
Okay.
Okay. And so they started to embed finance into it. You know, actually, and this occurred to me one day, just fairly recently, actually. I didn't really think about it in this way. But what is cloud computing at the end of the day? You know, we talk about cloud computing and we say it unleashed all this entrepreneurship because it lowered the cost of startups to start computing, start offering all these great services, AWS, Azure, et
Yeah.
cetera. But that is essentially smart asset financing. So instead of spending all this money to buy data centers and servers and the ability to actually deliver the storage and computing, you
Yeah.
can actually just create it as a service. And now a startup can pay as they go as they use computing and storage facilities. And that unleashed a whole decade of innovation in startups. That's exactly what is happening, especially in emerging markets, that companies are shifting towards these business models where, you know what, you don't need to buy the servers and stuff right away. We'll set it all up and we'll sell you those services and you use it and pay for it as you go. And so what we do is we basically finance all of them. So we aggregate what they do into a single pot and allow investors to invest in those kind of businesses that generate cash, but in a diversified portfolio, almost like an ETF for cash generating smart asset financing companies throughout emerging markets.
So I want to ask this question. I'm trying to figure out how to word it. I'm going to ask it like this. Have you seen growth in these companies that you have invested in? Have you
Oh my
seen
God.
have you seen a return investment I mean, let's put it this way. Have you seen a return investment and growth in the companies you have invested in?
So I think, so the answer is yes, but we deliver something even better than this. So today, our current track record for investing in these companies is a consistent short-term yield of 30% IRR. So we'll put $1 in and we get a 30% yield back for every dollar we put in. What's even more interesting is that from our data, because we track it all in real time, we know that for every dollar we invest, the local economy gets $3.72 of new revenue generated every year, not over a lifetime, but every year. So you can imagine how much value is being created. We're just capturing a percentage of that. So we're capturing a huge amount of value in cash flow. It's almost as if we're investing in and capturing the cash flow from thousands of apartment buildings throughout emerging markets. But we're also seeing some of these companies that we invest in, who are, by the way, tech-enabled companies, really scale their business because of this access to capital that we provide. And so, the model isn't an equity investment model, although we do have some equity investments in some of the companies that we do smart asset financing with. And their valuations have 10, 20x since we started working with them. So there's absolutely a win on both the equity valuation increase side, as well as the immediate cash that we get from helping these small companies grow.
So I'm reading here and it says you have 9,000 productive assets deployed across 13 African countries with a default rate of less than 1%. You care to explain that for give my listeners a little bit of a detail on that?
That number's gone up now. So we're now at 11,000 as of this last month, 11,253.
Congratulations.
/assets out there. And we're spread across a dozen countries in Africa and also a little bit in Mexico as well. And we just generate revenue based on what we deploy with them. So it's pretty straightforward.
So I'm looking at this and I'm seeing that. What does that mean? You have assets. Is that like companies you've invested in, or is it people who are, go ahead.
The refrigerator, the motorcycle. Okay. So each thing that we finance, we count as one.
Okay.
Yeah.
So each one of those assets is one thing that you have financed for someone or some entity or company.
And usually it's an entrepreneur who's operating that asset. So we have, operators of the asset, and we also have these operating partners that essentially service the assets.
Okay. So let's talk about the data. You say you monitor the data globally all the time. What when you monitor the data, or your team monitors the data, you're getting all these numbers. Now, when you first started this, I'm not seeing when you actually started this. When did you start the company?
January 2021.
Okay. So now we're in 2022, you see this has been almost a year's worth of data. Have you seen a flux from when you first started to now? I mean, you've seen the numbers increase. Have you seen a stable increase? Have you seen a giant increase? What have you seen over the
Yeah,
last year?
we've seen a giant increase, partly because just of the availability of the capital. So
Okay.
it's really supercharged a lot of growth. But what we've also seen, and this is very particular to the times that we have right now with the global economy, is that there's a lot more economic fluctuations going on, especially in currencies and whatnot,
Hmm.
depending from market to market. And we really see um, a lot of volatility in sectors that involved smaller businesses, much smaller businesses. I think a lot of businesses are having a hard time. Look, at the end of the day, the growth is still so rapid that it makes up for a lot of the potential losses. But we do see interesting things happening with the data. And again, we're seeing it in more or less real time, which is quite interesting.
So the question I was going to ask actually kind of touched a little bit on it, with markets as they are, and with the global resources becoming here and there, with getting stuff in distribution. Are you planning the next couple of years to hopefully see a drop in inflation and all that different things, and hopefully a increase in revenue, an increase in people being able to start businesses? Because where I stand in this area, I'm a small town in Pennsylvania. A lot of people, because of financial situations, came and start a business, and
Yeah.
it's like, I know in Africa, I'm sure there's a lot more harder situations, with you were talking about the global economy, with prices and stuff changing and stuff all constantly. I'm sure that it's hard to even run a business. So are you expecting there to be a change, and hopefully for the better or worse, in the next 2 to 3 years?
Yeah, look, again, with specific markets like those, many of those in Africa, the growth is there's so much demand and so much pressure that we don't see a major issue in what we're doing in Africa. I mean,
Okay.
I can go into detail on how we hedge and how we do a lot of things, which I won't do. I'm not that concerned. I mean, I think it's going to be tighter than it was in the past, but I'm really not that concerned.
But
I think in the US, it's interesting because um, I've gone through a lot of recessions and stock market crashes and whatnot over the years. The one in 2000, the one in 2007, etc. And I can tell you very directly that the best companies I've invested in started in the wake of those recessions.
mm,
Right, folks who would leave their job or find better opportunities, start companies then, and use the opportunities that emerge during those downtimes to build something new. And I think some of that is opportunity cost, right? Hey, if you're making a lot of money and your company is growing and they're just they keep hiring and giving you a raise, then there's less of an incentive to leave. But if you're in a stagnant big company because the economy sucks, that's the right time to start a business.
well,
So I'm
yeah,
still very bullish about that. But what's
yeah.
interesting about the current situation is that the job market is still very strong,
Hmm.
right? I mean, people aren't losing their jobs at all. I mean, there was a round of layoffs with tech companies, but they're getting rehired right away.
Yeah.
I mean, there's still a dearth. And so it's going to be really interesting to see if we get the same wave of entrepreneurs emerging out of this recession as we did in the early teens, after the 2007 2008 crisis, or even in the early 2000s.
So I want to touch on that. What you were talking about, hoping that there's gonna be a lot of entrepreneurs. When we talk about entrepreneurs, it's not, and some people just think I like to talk about tech startups. That's not what my show is about. I talk
Yeah.
about every different startup. Um, in the emerging markets, in the emerging times we're facing, where people are going to start probably going back to entrepreneurs, maybe leaving their tech company they work for or leaving whatever company they work for, a start company, do you see a lot of new tech startups, new any startup, like, for example, not even just tech startups, but like a bio startup or a farm startup or different, I mean, different things in the investments you make? Do you see a lot of different startups coming out of the emerging markets?
Oh yeah, I mean an enormous number. So I have over 100 companies in Africa alone in my portfolio, and every day, literally every day, I get a half dozen inquiries in my mailbox. Right, there's just loads of entrepreneurial activity. I think there are. It's, Africa is a big place, not one country. There's different hotspots right now
Hmm.
that have loads of innovation. So Cape Town, for example, in South Africa, we actually twice a year take international investors to Cape Town just to introduce them to the startup ecosystem there, because it is so vibrant. There is so much talent and so many great companies. I got hooked the first time I went to go talk to those companies back a few years ago, and now I'm really just trying to bring more and more people to Africa. So absolutely, Lagos, same deal. Although I think there's some issues in the next, well, at least until the next election in Nigeria with the economy, but there's still the same great entrepreneurs there. In East Africa as well, in Morocco, in Egypt, but also in smaller countries like Senegal and Ghana. There are a lot of really interesting entrepreneurs in all of those markets.
So we have 9 minutes left in the show. I'd like to talk about your nonprofit work. You have a clean water initiative in Haiti, it looks like, and you have different things throughout different places that you do charity work for. What do you care to talk about that? Do you care to talk about like different things
Ooh.
you do for different nonprofits?
Yeah, no, absolutely. Gosh, it's a actually there's a bit of an evolution really, and it's a direct path to where I am today. As I alluded to earlier, I think when I first engaged with emerging markets, I thought the right way to do that was through philanthropy and volunteerism.
Hmm.
So, 2010, after the earthquake in Haiti, I donated to a couple of companies or a couple of NGOs in Haiti doing clean water, and I thought that was the right way. And I also used that opportunity to go to Haiti to understand the market better and understand what's going on there better. I'm just interested in those kind of things. And I very quickly concluded that the aid system was very broken.
Hmm.
And at best, it was a band-aid on many of the problems that are out there. At worst, it was actually perpetuating the sources of the issues that keep those places poor. And so that's when I really shifted towards investing in entrepreneurs. I still do a lot of philanthropy today, but it's almost exclusively focused around how do we empower entrepreneurs to fix problems. One of the core tenets that I walked away from my philanthropy and my aid and charity work was outsiders coming in and fixing problems is never a really good solution,
Yeah.
right? Something always goes wrong because outsiders have their own things going on. I mean, they're not bad people per se, but a big NGO needs to raise money from its donors, so it's got its own incentives. So its primary customer, as I like to say, is the donor, not the
Yeah.
people that are help. And so you have two customers, right? And who do you at the end? At least the big successful charities, who do they have to make sure they serve? The donors.
Hmm.
So oftentimes it's the other side that doesn't get what they need. And so my focus these days is on, so for example, I sit on the board of a nonprofit lender that lends to companies and microfinance institutions in emerging markets. It's called MCE Social Capital. They have this really unique model of lending. I love what they do because at the end of the day, they're figuring out how to give more loans to small businesses in emerging
Hmm.
markets. Exactly what I'm doing as well. I run this charity, this clean water, that's really directly an offshoot from my days in Haiti, because a lot of that work is still in Haiti. But even in that situation, our primary model is how do we support local businesses to
Hmm.
deliver the services that the communities need, not coming in as an NGO and displacing the local businesses in delivering services.
So
So my mindset is really around how do we help entrepreneurs solve problems, not solve them as an NGO.
So I want to ask this. So when you hire people to work for you, I don't know, I didn't get an employee count, but when you get people to work for you, do you want them to have the same driving mindset to help those around them, to help bring entrepreneurs up?
Oh, yeah. No, look, yeah, I don't know how much time we have, but that's a really
We have 5 minutes. So if you
5 minutes.
pack into
That's
five
a
minutes, that'd be great.
really, 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 really important question. I think, at a big company, it's a little different, but especially at a company like ours, we have 30 people in our company now. How or why those people are motivated to work for us, especially in the more senior levels and above,
Hmm.
so important. Because if you don't have the right motivation, people's daily decisions go in different directions. And so I've been very, very careful to hire people who share the same mission, at least,
Hmm.
or at least a core set of values. And I think that's really important for any company,
Yes.
because you can select the best, talented, skilled people, but if they share different values, it's tricky. And so we've really tried to go out of our way to identify for ourselves and constantly talk about it too. What are our core values? And how do we make sure that as we grow the team and continue to hire people, that people coming in align with our values as best possible? Right? And what are those values for us? It's very straightforward. We really care about changing the global financial system for the better, to create a modern alternative to a broken system. We want to help entrepreneurs and believe in entrepreneurship, but we are also jaded or cynical or whatever enough to know that you can't just give money away. You
Yep.
have to innovate on how things work so that you can create efficiencies and better models, not just band-aids. I think the other value on the team that's very important to me personally is that people take risk and
Hmm.
are not afraid to take risk. And I tell my daughters who, well, they ski better than me these days. But if you're not falling, that means you're not trying hard enough to push the envelope, right? You have to fall. That's how you know when you're doing something better.
Yep.
You're doing something, that you're learning something, that you're trying something that somebody else hasn't tried before. If you're not doing that, you're not innovating.
Yeah. Well, Jim, it has been such an honor having you on the show. I look forward to seeing what your company does in the next 5 years, even past that. Like I really look forward. Something like this is something that's going to benefit a lot of people in a lot of underdeveloped countries. I'm hoping you go past Africa and get to go to like people like you get to do more work in Haiti and stuff and more in Mexico. I think that would be so many untapped potential of entrepreneurs in those areas. Jim, it's been a pleasure. For those interested in getting more information on Jim, his bio will be available on the website at www.ittechtalkpodcast.com. His links and his website is up there. You'll be able to check out everything and listen to the episode there and get links to where the episode will be available. His video will be up on YouTube, so you can watch this interview. If you like listening to it, that's great. But we know there's a lot of people who like to watch it. We just hit 500 some. Actually, I think it's today hit 600 some views on the one video today from the last interview that we uploaded. People love watching it. Really excited to push more videos, push more content. But again, that's coming soon. Just give us some time. We're working behind the scenes a lot to give you great content. Jim, again, thank you so much for coming on.
Thank you so much for the opportunity to talk about Untapped, and good luck with growing your show.
Thank you so much. Thank you.